You've always wanted to invest in property. You've, been told that property is a way to invest. But there's a lot of challenges that come when you invest in property. Now, don't get me wrong, it's one of the best investments you can possibly make. But along the way, there are a few key issues that you need to identify and highlight and understand that investing in property is just not something that's instantly going to give you returns, if you put it in that perspective. So don't worry, we just got you covered, and we're going to go into some of the mistakes people make property investing in South Africa, and a bit about why the buy-to-let market in South Africa has been not clearly defined as yet, if I may put it. Don't worry, we just got you covered. What is up, everyone? My name is Dijesh, and for those of you that don't know, I have been in the property industry for the past 10 years. Yes, I'm a principal agent. I do have my own real estate agency, as well as I manage property for a real estate agency as well. Now, for those of you that are actually wondering about property investment, you can do to invest to obviously grow your wealth through property. Watch the video where I talked about why property is a very good investment, but there's a lot of nitty-gritty that people don't care to sort of give information on or share knowledge on, and this is where I'm coming in to obviously explain the whole scenario as to why I kind of disagree with certain buy-to-let techniques that are actually taught in these real estate courses and the advice given by a lot of people. Number one, let's just go into what we kind of have an issue with, and that is buy-to-let. Now, the issue with buy-to-let in South Africa is a lot of people really have this mindset that I'm going to buy a property, all right? I'm going to rent it out. I'm going to collect the rent. That person's going to pay for my bond. And technically, if there's a surplus, I'm going to pocket that surplus. Now, in theory, that is ideal, right? That is the ideal method in theory. But the issue arises when you put the actual pen to paper on the calculation and cost. And what does that mean? So let's get into an actual example. Okay, so you find a property. Let's just say we look at a property. We want to buy in an area, a market, anywhere in SA where the market is like 700,000, right? For the purposes, I'm going to use the figure 700,000. You find a property that's 700,000. Now let's assume this property is in a complex, okay? If this property is in the complex and it's 700,000, right? You want to go ahead and buy it as an investment. So all well and good. Banks can give you a 100% bond, or generally you've got to put a 10% deposit on that property, 700,000, which would be 70K. So let's look at this much deeper, right? If you get a 100% bond on a property that's 700,000 at roughly an interest rate between 7 and 10%, you're more or less going to be paying between 6,500 to 7,000 Rand a month on your bond repayments. Now that's all well and good. So what does that basically mean? Quite frankly, it means a 100% bond and a certain interest rate. This is what you got to repay, right? And if you're doing it for a buy-to-let investment, you're going to have to obviously have a tenant in there that's going to pay you rent that you're going to take and put towards your bond amount. Now, be mindful that just because you buy a property for 700,000 and your repayments between 6,500 to 7,000 doesn't necessarily mean that the rental that you're going to get is going to be the full bond amount. Now, what do I mean by this? Okay, let's just say, right, the rental in that area is between 4,500 to 5,000 a month, but the property prices are selling much higher than what you can actually gain in terms of rental. So your bond repayments are going to be higher than what you can actually collect in rental. Automatically, that means you're not going to be able to place a client in that specific unit that you've bought to cover your bond amount. So if you take the calculation, right, at 100% bond, 10% interest rate, you're going to be paying about 7,000 a month. And if you can only command 5,500, the difference between the 5 and the 7 is something you're going to have to put in. So automatically this becomes a major liability, especially if you've never factored for this and you had the high hopes of actually having someone pay off your bond. Number one. Secondly, another hidden cost that comes into play is when you buy to let, you need to be mindful. If it's in a complex, there's factors such as rates and levies that you've got to pay. So assuming you've bought in this complex and the levies are like 1,000 Rand, or let's just say 1,500, depending on the complex levies, that's an additional cost that you've got to add on top of your bond repayments, because you will need to pay those bond repayments plus levies. Now, let's just say you said, okay, I'll buy it for 700,000, my repayment 7,000, my levies are 1,000 Rand. I'm gonna rent out this place for 8,000 so it covers my, levies and bond. Again, if the market or the current rental in that area is not sufficient to cover your bond amounts, you are never going to get a client to rent it out and you'll be running at a loss. So in theory, it sounds like I'm gonna buy and rent it out. In theory, it actually sounds really good, but be mindful of the area that you buy as well as the area's rental value within that area. So that's something that a lot of people kind of don't realize. A very good example was when we sold the Oceans development. A studio unit went, which is 34 square meters, went at a starting price of 1.59 million. Today, a studio unit cannot really get that 15,000 Rand a month. You're probably looking at 12,500 that you could get on a studio unit. And this is where the problem arises. You're going to roughly be in a deficit every month with your repayments. So obviously you're not going to be collecting full value for what you bought the unit, full bond value in terms of your rental. So don't get it wrong, property is the best investment, but when you are buying to let out to obtain that surplus, you need to buy in a market, number one, where the price is good, the rental value is high, and obviously in an affordable price bracket. And that brings me to point number 3, affordable price bracket for people in property, and that not everybody can pay 7,000-8,000 Rand a month on rental, especially if it's joint couples or a single individual. So property market, your best bet and your best game is probably people in the lower income brackets, because then you're guaranteed to obviously have a bigger pool, a bigger segmentation of renters that you can actually target every month to ensure maximum occupancy for your unit. And this is from a real life example that I've been involved with. So when I stayed in Johannesburg, we had a property that was subdivided. So the property cost 1.2 million, so 1.2 million, you're paying 12,000 a month. But the property was massive enough in an area where, land space is big. It was big enough to subdivide, all right, and rent out smaller spaces for more affordable market rates. So when we did the math, we were able to subdivide that property from the 3 bedrooms that it was to actually smaller little and extensions into smaller little rooms where you could command about 3,500 in that area, which was very, very affordable, ensured maximum occupancy, and we were able to extend it out to about 10 to 12 different rooms. So if you put pen to paper, renting out those rooms with its own toilet and bathroom, own little kitchen for a price of 3,500, subdivided over 10 units, gave you a return of 35,000 less your 12.5 bond repayments. Now that is profit that you're putting in the bag, and that is a concept that you want to aim for in buy-to-let properties. You want to be able to buy where you can rent and obtain a profit. And once you rent and obtain a positive cash flow out of it, then you pretty much have a very good investment on your hands. My name is Dijesh. Thank you for watching this video. I hope you guys do enjoy it. Like, comment, share, and subscribe. And don't forget to watch all my property videos, and I'll see you in the next one. Thank you.